Hello and welcome to this year in review conversation with SEEEN, the AI-led smart video provider to drive increased views and revenues across all video content. Adrian Hargrave is the chief executive. He joins us now. So Adrian, let's go straight to the numbers, because in September, investors learned that revenue for the first half of 2025 increased by 87% alongside the signing of one of your largest ever contracts. So do these numbers suggest you achieved your goals this year or possibly exceeded them?
Thank you, Sarah. Yes, no, the 2025 has been a really strong year for us, and I'd say overall, the strong increase really reflects the plan, slightly ahead of where we were expecting to be, this time last year, but really executing on what we set out to do. And actually, on top of the 87% growth in the first half of 25, let's remember that our annualized run rate has also got up to 6.5 million at the end of September. And actually, this means that we should see continued growth through 2026 and beyond as well. Signing that large contract, up to $3 million in annualized revenue each year, again, was a great boon for us during the year. And really, by the middle of 2026, we expect to see that fully up and running. So yes, 2025 has been a strong year, probably slightly better than we planned, but honestly, it's got the momentum we are expecting, and allows us to see 2026 and 2027 continuing to go strongly.
Okay, so for investors new to the story who see that 87% jump and are wondering what a run rate is, can you briefly explain exactly what SEEEN does to generate that revenue, and what is the core problem you're solving for your clients?
Of course, Sarah. Yes, our core offering is underpinned by AI. Now, I know everyone's saying that word these days, but we have been saying it since 2019, so we're not just jumping on the bandwagon. Really, our baseline tech enables video owners to look within videos and find the most relevant and appealing moments for them. And that's relatively useful, but actually the real secret behind what we do is we take that a step further, and we've created two products, Creator Suite and Shortcut. The first one, Creator Suite, allows our customers to monetize those emotional moments directly through, for example, interactive video commerce or putting in surveys, quizzes, subscriptions. One example would be, for instance, if you're watching sports highlights and a football player scores a goal, you could actually sell direct merchandise directly whilst they're watching that, and actually collecting money, collecting more data about your customers. But it's that product that allows people to make money, not just know what's in their video content, but to make money. Shortcut, on the other hand, enables you to really clip and find relevant clips faster to produce what we call new or remixed content for pushing onto social channels without actually filming new content. So in this way, we're driving a direct ROI for our clients, not just this what's so typical of AI is just say, oh, here we found more data for you. It's actually taking that one step further and enabling our clients to use that data to drive stronger results.
So looking at that operational growth, what specific drivers are fueling this momentum, and is it sustainable heading into 2026?
Absolutely sustainable through 2026. I think, as we said before, we signed one of our largest clients with a $3 million annualized revenue stream. We're also at $6.5 million at the end of September in terms of run rate. That on its own, if we didn't do any new business, that would drive 30% uplift versus 2025. But what's also driven the growth through this period is a combination of continued direct sales based off case studies, and the case studies obviously continue to get better with 10% click-through rates within video. That's really strong, and that drives a lot of interest for our solutions. But also within what we see as our more consulting side of the business on social media, we've signed up a big reseller who's helped drive some of that growth. And really, in 2026, one of the things we would like to do is sign up reseller partners for Creator Suite as well, to drive higher margin sales in 26 and 27.
But to be honest, Adrian, to be devil's advocate, the digital video space is crowded. So, what is the key differentiator of SEEN's technology that can't be easily replicated by the competition if there is competition?
Yes, it's really the combination of both the AI that we have for finding key moments. There are other people who try to play in the space a bit. Generally, they focus more on key moments based on speech, whereas our solution looks at lots of different classifiers, so about 20 different classifiers, including activities, face detection, face recognition, emotions, and other areas. So there isn't really anybody else in the space doing that, not at a mass level. The second piece is also that we drive a platform that enables direct monetization. And so again, you have lots of people who are focused on delivering a video player, but they don't think about how to help people find the best content within that. It's by combining finding the best content within your collection and then helping you to monetize that better. We haven't seen anybody else doing something similar. There are other players who are trying to do bits of it. Our core goal is to continue growing. And actually, as we continue to do that, as we're delivering more data, what people are watching, what they're interacting with, that continues to build up our moat because we will have the data that nobody else does, which enables us to deliver better decision points for our customers.
But, Adrian, you operate in a world of short form video influencers and content creators. There is a worry that we are approaching peak content. Is this market, still growing, and where does SEEN fit in?
Scene is, I mean, I guess take a step back, the video market isn't going anywhere. Even if we are reaching peak content, which I don't think we necessarily are, we're probably not reaching peak viewership. And that's really what matters. The younger generation, and everybody actually, is just watching more and more video. And I don't really see that changing anytime soon because it's actually easier to watch video than it's ever been. Bandwidth, the 5G, all the rollouts making it faster. So it's all about how much is getting watched rather than how much is getting made. And I think to that extent, we're not going to see it. We're not going to see it falling. And actually, there's a big enough market for us there anyway. There are going to be more. There are other trends as well, such as meta glasses and generative AI that maybe makes making video faster. The issue with having more content out there is actually trying to get your content seen by your audience, and us, that's where we can help deliver the relevant content to your audience as quickly as possible, but then also monetizing it, because that's the biggest struggle that so many people have, especially commercial enterprises. I think influencers and other people who are just doing it for fun, maybe don't, they've got a slightly different approach to it, but big organizations need to make money from product sales, from advertising, and justify their video spend through that. And again, that's where we really fit in, is that we can help show you a direct ROI, show you, deliver video commerce, tell you this video content is delivering you money, and helping to make video a profit center rather than the cost center that it's been for lots of our clients historically.
Okay, so right back in 2021, you were talking about AI, you were ahead of the curve. But is AI now a threat to your business model, or are you finding it to be a bit more of an opportunity?
I would say it's generally an opportunity. There's always threats because you don't know who's getting funded and which projects are going on in other parts of the world. But generally, the way we see it is an opportunity. As you said, it's in our DNA. We've been using AI since day one. And from one side, obviously on the, let's say on the admin side, it helps us drive efficiencies, it helps us speed up processes, it helps us get our job done faster, which as a small business is vital and helps to keep our overheads lower, and hopefully then will also, will mean that our margins can increase faster as well. On the other side, in terms of AI and the generative AI side, actually that's really also a boon for us because the more video that gets made, the more videos, there's more video content that needs to generate returns. So our client base, so our total addressable market gets bigger. There'll obviously be people trying, I imagine there'll be more people trying to compete in the space, which obviously we need to be aware of. But actually, as long as we continue to execute and continue with our strong case studies, the market's big enough, and the more AI, really, we welcome AI progression as quickly as possible.
Okay, so you mentioned the market there. Beyond AI, what tech trends do you see dominating in 2026? And how is the company poised and positioned to benefit from them?
So I think I'll focus mainly on video because there are obviously bigger picture trends, potentially like quantum computing and other things like that, which I don't see necessarily being relevant to us this year. But in 2026, I definitely see the beginnings of AR and VR potentially returning, especially with more wearable devices and things like this. Um, Really, that's going to drive the whole point of those is to drive more interactivity. And actually, that's where we're that's where our smart video platform really excels, is that we're ahead of the curve in driving interactivity within video. Yes, I think ultimately business models may shift in 3 to 5 years time for video and actually moving towards a VR and AR world, but before that happens, I think you'll see more and more video becoming interactive, and that's where we fit in absolutely naturally. And we're ahead of the curve here, and we're a natural solution for people looking to deliver that.
We have to, but you don't operate in a bubble. We have to take the macro environment into consideration. Here in the UK, delayed budgets and geopolitical volatility globally. How sensitive is the business to these external shocks?
Well, Sarah, I'd say it obviously sounds a bit glib to say not particularly. The reality is that as a business, it doesn't necessarily affect us directly. Obviously, it affects potential customers, and that means that they may be selling less products. It may be that their budgets have tightened. So actually justifying ROI is ever more important. And that's where, again, I think we have a really good offer. We have a really strong offer. We can show people how much extra money we can help them make from their videos. So I think, it probably means that there are going to be less people maybe looking to change solutions. There may be more retrenchment. So it may be that the number of people looking to switch is smaller, but those who are, we have a strong offering, we have a strong ROI, and in an environment where every penny has to be justified, every penny spent has to be justified, that's something we can help deliver in a way that other video players can't, because advertising rates it might get weaker. The products they're selling, it might be harder to justify the products they're selling, all these other things, whereas we can help drive direct sales.
Now, in November, you personally bought 100,000 shares, Adrian. Now, that's a strong signal. So, why was this the right moment for you to buy?
Um, so obviously during the year when we've been inside for quite a long period, there's not that many windows that we can buy. I'd always intended to buy at some point. There may be, I'm not going to say there won't be future purchases, there may well be, and I want to align myself more closely with shareholders. I want to, I want to, our ultimate goal is to drive shareholder value. That's my ultimate goal, and I see value in our shares. We've been growing at 50, we grew at 50% in 2024. We're obviously on track to do that in 2025. Told you some of the numbers already. We should be growing at pretty fast levels in 26 and hopefully 2027 if we execute. And look, every CEO obviously sees value in their shares. I do too. But especially if we continue to execute in 26 and 27, the share price today feels like it should be cheap. But ultimately, it's also aligning myself with shareholders and making sure that they see that I have confidence in the business as well.
So, what is going to drive sales in 2026, Adrian?
As I said earlier, we're going to continue with direct sales. That's had some good effects. Really, what we'd like to see, we've seen that $3 million deal already. We'd like to sign more seven-figure deals on the direct sales. So that's obviously a big focus for us in 2026. The other one is also to sign up more reseller agreements. I think, we don't want to necessarily build up a massive sales team, take that risk. We'd rather be having other people, partnering with people and maybe giving them a little bit of margin and going to their client base and their inbuilt client base. So I think those are two things. The third one is, you may recall, or listeners may recall, that in 2024 and early 25, we raised money, part of which to develop out a training product and a training solution, which we're close to rolling out. And we've been we've been implementing with a couple of our customers already. That's going to be a big focus for us in 26 and looking to sell that more aggressively and going into that enterprise space. Again, coming back to the issue, as you said, with the geopolitical volatility and the extra taxes, actually getting and training staff faster is going to be increasingly important. And that's something we think we're well placed to play into in 26 and 27.
So this final question is probably the most difficult one, Adrian. What one message would you want new investors to take away from SEEN today?
I'm going to cheat and do two. Okay, Sarah. So the first one, look, it's 25 has been a strong year building on the foundations of 24. And I really do see scope for continued acceleration in 26 and beyond, as we've discussed. And so this should be an exciting time for any incoming shareholder. I, I also want to say here quickly thank you to our current shareholders who've been great and also supported us with an early warrant. Many of them support us with an early warrant exercise in May, and that's enabled us to continue delivering faster and executing faster. And the combination of strong operational performance and a very solid shareholder base should mean that for any investor, both new and old, it should be an exciting time to be a SEEN shareholder as we continue to execute.
Many thanks, Adrian Hargrave, Chief Executive of SEEN. It's been a pleasure. I'll see you next year.
Thank you, Sarah. Have a great Christmas and New Year as well.